E12.12. On January 1st of 2020, Lani Limited had £1,000,000 of share capital ordinary for shares issued at par. It also had retained earnings of £750,000. The company issued 40,000 ordinary shares at par on July 1st and earned net income of £40,000 for the year. Instructions: journalize a declaration of a 15% share dividend on December 10, 2020 for the following independent assumptions. A. Par value is £10 and market price is £18. Okay, so here the key words are, if you see declaration of share dividends, that means that the first thing that you need to calculate is the number of shares outstanding. Okay, I'm writing it here as NSO, but please write the full name. Okay, so the formula for that I've showed you before, but I have it here again. That is going to be the original number of shares plus all of the share issuances that you have minus the treasury shares issued or purchased if you have any, and plus the treasury shares sold also if you have any. In our case, do you see we have a lot of numbers, right? But the numbers that actually matter to us are a few, because you see over here retained earnings, we don't need that, right? We really don't need that. We're not going to be using that for anything. And here they also told us the net income, but we also don't need that. So actually the numbers that we need are these two. This is the original value of the shares, right? This is the original issuance price. But the thing is, you have to be careful, because you see that here we have a pound sign, right? Here we do not have a pound sign. And according to the formula, that has to be the original number of shares, not the value of the shares multiplied by the par value, not the issuance price. So what you have to be careful is that we have to transform that £1,000,000 into number of shares. And how do we do that? Well, how do we get this number? This number is the issuance price, right? Which is the number of shares times the par value. So if the par value in letter A is 10, we got this issuance price by multiplying the number of shares times 10. That's how we got this number, right? So if we want to do the opposite, we have to divide it by that value of 10, because the par value is 10 in letter A, which will give us 100,000. That is our initial number of shares. So we can go ahead and write that number here. And according to the formula, now we have to add all of the issuances. Here they said that they issued extra 40,000 ordinary shares. And that will give us 140,000 number of outstanding shares. Okay? We're not adding and subtracting any kind of treasury shares because we don't have any. Alright, since we know that, now we are ready to make the entry. Over here, I also have kind of a cheat sheet that I prepared for you. You can take a look over here. And you can use this for your guidance in the future. So every time you have declaration of share dividends, you have to divide them into small or large. If your dividends are below, they're smaller than 20 to 25%, they're small. If they're bigger than 20 to 25%, they are large. Now, if you ask me, what if it is 20% or 25%? Well, from my belief, I believe that you're not going to see any kind of exercises that have rates exactly like that. So it's either going to be, for example, in this exercise is 15, so we definitely know that it is small, or it is going to be 30, so we will know that it's going to be large. Anyways, so there are two entries that you make. If it is small, in our case, this is the entry that we're going to be making. And if it is large, this would be the entry that we would be making. So here I used some different colors to make sure that you pay attention to this part over here. You see, these accounts, they are in both, right? But share premium ordinary, we're just going to have this account if we have small dividends. But this part over here, this changes, right? For example, share dividends, that is going to be the number of shares outstanding times the percentage times market price or fair value if it is a small dividend. But if it is a large dividend, we actually multiply this red part by the par value. So make sure that you keep that in mind. Knowing that, we are ready to make the first entry of December 10 of 2020. 2020. Okay, since we are dealing with a small dividend, it is 15%. The entry that we're going to be making is this one. So over here, I'm going to have share dividends at the top. And please don't write the names like I do, okay? They can actually deduct your points if you do. Ordinary share dividends distributable. And share premium ordinary. Okay, so for the share dividends, that is going to be the number of shares outstanding times the percentage. So that is going to be this times the 15, right? Times what? This is a small dividend, so it's going to be times the market price or the fair value. For letter A, that is 18 pounds. That will give us let me do that one more time. Okay, that gives us 378,000 for the share dividends amount. Ordinary share dividends distributable, that is going to be, again, number of shares outstanding, rate, and in this case, that is going to be the par value. For letter A, that is 10 pounds. How much is that? That is 210,000. And the share premium ordinary, that is going to be the difference between these two numbers. That is 168,000. Okay, and that is letter A. Let's see what letter B says. Letter B is asking us to do the same thing, but we just have to change the numbers. Now, here you have to be very careful because you might just start wanting to write that entry over here, right? And just start calculating the numbers. The problem with that is that our number of shares outstanding is going to be different, right? Because how did we get that number in the first place? Well, we divided that £1,000,000 by 10, which was the par value of letter A. But in letter B, the par value is 5 pounds, not 10. So what we have to do is we have to calculate the number of shares outstanding again. And the first number will have to be that £1,000,000 divided by 5 pounds, not 10. And that will give us 200,000. Now we can come back here and add the extra shares that were issued. In our case, it was 40,000, remember? It's that over here. And that will give us a number of shares outstanding of 240,000. Now we can make that entry. Since the rate is the same, the only thing that changed was the values, right? But the rate is still the same. The share dividend is still the same. So the entry is going to be the same as well. We're just going to be calculating new numbers. And share premium ordinary at the bottom for the difference. Okay, so the share dividends, that is going to be what? That is going to be our 240,000 times our rate of 15% times what? We're still looking at this entry over here, right? This exercise is only at this entry because we do not have a large dividend. So for our share dividend, in this case, we will multiply by the market price. In this case, the new market price is 20 pounds. How much is that? That is 700,020. For the ordinary share dividends distributable, same thing, right? There's always a number of shares outstanding times the share dividend times, in this case, par value of 5 pounds. That gives us 180,000. pounds. And the share premium ordinary is going to be the difference between these two. That gives us 540,000.